Saturday evening. We see a couple of people joining in right now, so we'll give them another 5 minutes and then we'll begin the presentation. Thank you. Good evening, everyone. Thank you for joining us today on our webinar, Common Questions, Uncommon Answers. Today, we have with us Mr. Shyam Sekhar, the founder of ithought, and also Harshil, who's the AVP of Investment Strategy. I invite them to begin the presentation.
Thank you for joining us, friends. I hope you're able to hear me clearly. Today, we're going to talk about a product which was born out of a clear, well-identified need. Whenever I see investors, I find that they have their investments all over the place. They would have one person giving them mutual funds. They will be doing some investments in a PMS. Then there will be some money sitting in an AIF. Then they would also do some trading on their own. And the other asset classes will be in different places, sometimes represented, sometimes unrepresented. Then they will do all their debt through a banker. So when I ask this investor, what is your consolidated composite investment performance? I have rarely seen an investor who knew it. Nobody knew the returns. Nobody knew how well they were doing. Everybody takes the best part of the portfolio and say, I'm doing well in this. For example, when equity is doing well, they'll say my equity is doing well. When FD interest rates are high, they'll say that I have very good FDs. When gold is high, they'll say I have enough jewelry, so I have nothing to worry. But nobody knew what is the investment performance. It is important that an investor should know where he stands, how well he is compounding his money, what is the consolidated performance of his portfolio, and also to track how he is changing the profile of that portfolio. Most investors I have seen don't do this. And this becomes extremely critical, especially if you are handling a family wealth corpus, which is handed down to you, or you're building a retirement corpus for yourself for the future, or you're actually living off a retirement corpus. Many retirees don't know whether they're eating into capital or they're eating into returns. They don't know whether they're spending out of their capital or out of the returns because they don't know the exact returns and they don't know what to do to improve that returns. Seeing all this, I felt that you should have one product which addresses this need. And that is how Sphere was born. We have done the same thing in a lesser version in the RIA for a very long time. But we found that the investor doesn't follow a holistic approach. For example, in a dynamic asset allocation, you may have to buy gold at a particular point in time. At that point in time, the investor will say, no, I don't believe in gold. His individual bias comes into the play. Whereas when you're doing a multi-asset, you cannot have those biases. You have to follow some rules, you have to follow discipline, and you have to participate. Or somebody will say, I don't want to buy this now, I'll buy it later, only to miss that opportunity. So the decision making has to be extremely sharp, timely, and it should be very precise. It should be taken when it matters. You can't take it 1 week later, 1 month later. Seeing all that, I slowly came around to the view that you must productize this. A multi-asset product which is run at the discretion of the manager. It won't work well if it is done at the discretion of the investor. And that's how we created Sphere. Today, after little over a year, we are confident that the execution efficiency is way superior in Sphere than in a RIA or any advisory mode. Secondly, the ability to scale up, the ability to invest regularly, the capability to take out money also. Suppose somebody wants a monthly withdrawal. All these things are already built into this product. So much so that we have not put an exit load at all, which usually every PMS has got. We don't have any exit load. We will be more than happy to help the investor structure to his needs. And we are confident that investors will stay with us because anyone who measures properly will stay. Only the guys who don't measure properly don't know what they're doing. And they are the candidates who will make choices which are suboptimal. So what we see today is that Sphere is a way superior strategy compared to the dynamic asset allocation products which the mutual funds offer. It's way superior because dynamic asset allocation of mutual funds is a binary between equity and debt. That's all. It doesn't have any versatility. Whereas we are doing dynamic asset allocation through a multi-asset, where the asset allocations keep changing according to the opportunity, which brings in far more efficiency than any competing investment idea that is there in the market. And it is far more sharper in measurement and review than anyone's individual portfolio. What an individual can never do, we're doing here. And over a period of time, somebody will be very comfortable owning just this portfolio. That's my reading. And that's why we launched Sphere. Today, I'm going to let Harshil do the presentation for you. And I'll be happy to answer Q&A after Harshil makes the presentation. Over to you, Harshil.
Thank you, sir. So the reason of why we wanted to speak about common questions and uncommon answers is because today everybody is in a confused state. People don't know what to do. People don't know how to think, the sort of direction that they need to take, because things are changing and things are changing very, very fast. 2 weeks back, market was down. Today, it is at 18,000 plus. So nobody expected it. Nobody knows what to do. So we thought that this is a great opportunity, not to highlight what we are doing, but to address what you should be doing. So I'm just going to keep the presentation very short and sweet, because I want to interact with each one of you and use this opportunity to interact so that things can get better, so that you get a good sense of direction as to what to do. Now, how to manage the challenging market that 2023 is turning out to be. Let's be honest, 2023 is boring. It's boring for me, it's boring for everybody. This is not at all an exciting market. One, we are taken off guard with what's happening. Second, there's no excitement. There's no thrill. What we saw in 2020 after COVID. After COVID was such a rush that everybody who put money made a lot of money. But this is not a market where you can make that sort of money with that same amount of thrill and excitement. Why? Right now, things are bad. Why they're bad? Interest rates have gone up from 0 to 5%. Things are bound to go bad. At the same time, there are talks of a recession. Things will slow down. Because things are slowing down, naturally, your economy will slow down, and the growth that the economy can offer you will sort of come off. In that situation, your equity markets will obviously take a hit. Opportunities open up everywhere else. Because equity also sort of takes a hit, again, opportunity opens up there. So everywhere there's opportunity, but you don't know what to do. What is it that you should actually be doing? First, you have to have patience. This is a market where you need to be patient. Why you need to be patient? Because everything will open up very, very soon. You have to be mentally prepared to take advantage of those scenarios so that you have something in your hand where you can take advantage of that sort of scenario. Second, discipline. You can't wait at the stands thinking that something will come your way, right? You have to be disciplined enough to continuously keep saving money in this avenue. Why? Today, FD rates are around 7.5%, 8%. Your inflation rate that RBI gives you is about that. The number that RBI calculates is 6%, 6.5%. But your household expenses are probably growing at 11.5 to 12%, right? Which means that you need to grow much beyond that. And the only asset class that can offer you that sort of growth is equity. But you need to be disciplined. You need to save money everywhere because not every time equity can give you that opportunity. You need to have a mix of everything because markets keep changing. So you need to have a mix of everything. The last but not the least is conviction. Now, in every market condition, there's a new winner. Now I'll address that in the next couple of slides, where we have a chart that shows every time there's a new winner and every time there's a new loser. Right. But the point is that you need to have a lot of conviction during the bad times, because that is what is going to reap you benefits in the good times. In the good times, everybody has conviction, and somewhere or the other, it's not reward, but it's validation that that conviction works. But in a bad time, conviction is what is going to make you stand apart from the crowd. And we do believe that crowds are never right and crowds are never wise. So with a culmination of these three, where you need to be patient, you need to always keep putting in and saving money. At the same time, save money in areas that you're confident in, where there is enough conviction for you to build upon. That is how you're going to weather through 2023 as a year of a boring market. Now, what should you pay attention to as an investor? This is a question that everybody keeps getting. Everybody has this question in their mind. What do I do? You told me all this. What do I do? Now, this is the most difficult question to address, because you have to do everything you need to be everywhere. You need to do everything all at once. Now, there was a movie that came out. It's an Oscar-winning movie, where the movie's name itself is Everything Everywhere All at Once, and that's the inspiration behind this answer. And the movie was very simple. It is basically taking randomness as an option and telling you that you have to deal with randomness. You have to deal with uncertainty. Randomness is everywhere, and what you do at that point in time matters more than what you could have done or what you should do later. Right? Things will be uncertain, things will be bad, but at that point in time, you need to decide as to what you need to pay attention to. And usually, you have to pay attention to everything. You have to read the newspaper. You have to speak to people. You have to understand what people are talking about and form your own judgment, rather than going to social media, rather than looking at YouTube, rather than looking at Twitter, because at the end of it, these are all opinions. And you need to form your opinion as an investor if you actually want to start building a very big corpus in the market. So you need to be present everywhere, and you need to be aware of everything that happens at any given point in time, and you need to be prepared to take advantage of that particular scenario, rather than thinking of what has happened and what will happen. Now, can there be a best asset? Now, this is what I was talking about. Winners of the past may not be winners of the future. Losers of the past may not be losers of the future. You look at small cap. Everybody has been raving about small cap since 2017. In 2017, it was the best asset class to put your money in, and everybody went into that particular asset class. Look what happened 2 years later. Small cap was the loser for the next 2 years, and somebody else came out on top. Likewise, again 2 years later, it came out on top, but that is on a yearly basis. So, assuming if somebody put their savings in this particular asset class in 2017, their compounded return for the next 5 years would only be about 2.5%. So you're not beating FD, you're not at least coming up to where your country is growing. At the same time, your money has not grown to what it should have grown. Right. Now you look at gold. Gold in 2011, 2012 was one of the most celebrated asset class after global financial crisis. Right. Subsequent years after that, it has been a loser. Right. And then from 2018 onwards, it has only been out on top. Right. So the point here is that there can never be a best asset class. Things keep changing. You have to embrace that sort of uncertainty and be flexible enough to take advantage of any asset class that is there. Because you can't have this bias that what did well before will do well now and can do better later. So every market condition is going to change. Every asset class may not be the winner and may not be the loser going forward. Now, where is it that Sphere comes into all of this? One, investors want a product that can adapt to any situation that arises. And we have been doing this for the last 10 years, where in the RIA space, we were agile. We were able to adapt to any market condition that was coming up because we had flexibility. We had no cap on any particular asset class. We had no cap on any particular theme or an idea. And that allowed us to sort of withstand any market condition that came up. Now, because we were able to adapt to any scenario, it gave us that leeway of buying more at the right time and at the right place. So we were able to position ourselves well in order to take advantage of that particular market condition. And subsequently, over the next couple of years, we did reap the benefits of it. And that is why we thought that we should productize this product, as what Shamsa was talking about, of having a savings vehicle where investors can park their money, that can weather through any market condition that comes up, at the same time offer investors that stability. Now we have seen over the past where every asset class is unstable. Why? Because investors go and put their money at the wrong time and think because of past things will keep on doing well, right? So investors actually want stability, right? And a savings vehicle where they can continue to contribute no matter what the market condition is. See, in the US, there's a concept called 401k where people close their eyes and contribute for their savings. But in India, we get very picky and we get choosy as to I'll do this, I'll do this. No, I need to do this. Right. But that's not the way for you to save money for your retirement for any goal that comes. If you're going to save for any goal that comes, you need to choose one particular asset class. You need to choose one particular product that can do everything. It's not only one asset class, it can do everything. Right. So investors actually need a savings vehicle where they can continue to contribute, where that product can go through any amount of market condition that comes by, and at the end of it offer stable returns and grow at very high rates for a very long period of time. 3 years and 5 years is not the time horizon that you should look for if you want to fulfill your goals. It has to be 10 years plus. So for a very long period of time, stable returns is what Sphere can offer, and this is what is in for you as an investor. Now, I will open the floor for questions. I promise you that I will keep it short and sweet, and I'm looking forward to interacting with each one of you. So the first question is, what would be your investment proposal for NRE, PMS equity, NRE, FD, or equally both?
See, we have a very unique product for NRIs. We have a Sphere NRI, which is very, very different for each zone. For example, the Middle East investor is almost like the domestic investor. He doesn't have any issues of taxation, other things. But an American investor has a different requirement. Similarly, investors in other countries may have a different requirement. So we have a very uniquely fashioned sphere called Sphere NEO, NRI Investment Opportunity, NIO, which according to geography creates strategy. So if you're an American investor, we have a certain strategy for you. If you're a Middle East investor, it will be a certain strategy. If you're in some other country, according to where you are coming from, there's a strategy which helps you also manage your taxation in that country. As far as NRE, FD is concerned, it will always continue to be a financial product which the NRIs patronize. But what I have noticed in NRIs is they overly patronize the FD when they should have good asset allocation towards equity. And they leave the FD to overly patronize equity when the equity markets are at a higher valuation. Both extreme reactions are to be avoided. So at every point in time, you must have a balance between what is your FD component and what is your equity component. And Sphere is a perfect product for a non-resident to keep his Indian equity investments in one place. So you'll be able to just take the return from that equity portfolio, take the fixed deposit return, NRE deposit returns. You know the proportion, you'll know your overall returns that you're making in your portfolio. So it's very, very simple to measure. And it's very simple to manage also. So Sphere has a very specific NRI focus, and we have got variants of a NRI product according to geography in which you are coming from. So the next question is Motilal Oswal, dividend 100 ETF. ETFs generally don't give dividend. The dividend gets added to your NAV. That's what it happens. So if you want to take money out of it, you can just sell some units and take money. That's how you should take money out of an ETF.
So there's a question on, can you give insights about INR weakening against Euro? As an investor, what to consider before converting to INR?
See, I don't know why many people start acting like they are forex traders. You're trying to get the maximum value out of foreign exchange. This I have noticed, especially among non-resident Indians. Now look at the converse. We are sending out $250,000 every year in each account name. Every year we are sending out. We are not trying to be over clever like the NRI. To me, if I have to buy Alphabet shares at $100, I'm more focused on getting it at $100. If I want to buy Netflix at 200, my money should go out quickly and I should make my investment. But I am not seeing this approach in the NRI. NRI is trying to fine tune his rupee to the last 20 paise, 5 paise, 10 paise, and by virtue of that, missing out on the investment opportunity. I think that you just have a systematic way of bringing in money at regular intervals. Your dollar average or whatever, rupee average will more or less be reasonable. It will average out over time. Trying to time it, especially bringing in the money, timing a transfer of capital always leads to delay in timing the investment. And the loss due to the timing of capital is seen in the timing of the investment. The investment doesn't give you what it should give. And I think that is avoidable. That's the most important thing. Because as an investor, when I send money out, I am not timing, right? I'm not timing the currency. I'm timing the investment opportunity. I think the investor who's sending money from outside should do the same thing. Look at the opportunity and don't delay. And deal with the exchange conversion agent who's reasonably fair. Ensure your bank doesn't shortchange you. That is the next point.
So the next question is, should one look at investment portfolio as one? Like if you have 2 or 3 mutual funds, the stock weightage to each stock comes to 2/3% of at the max. Is it advisable to invest in just one fund to keep things simple?
I would not invest in one fund, certainly not. The whole portfolio should be seen like one. That you should look at the portfolio as one. In that, I am totally convinced. And I will not replace a portfolio with one fund. It's like having one stock only, one style. I don't advise that. Yeah, a lot of people are doing it, but time will answer. But I don't believe in that. So you should have a portfolio approach. You should have multiple choices, diversification, different styles in the portfolio, different assets also in the portfolio, and you should have one portfolio, not multiple portfolios.
So the next question is, what's your opinion to invest in gold bees or pharma bees?
I'm not very enamored at the current levels. I will definitely participate in them only when the valuation comes to my zone of comfort.
The next question is, will you please help me in my investments other than Sphere?
Yeah, anyone who's a non-resident Indian can open a Sphere Neo account, and he has to have a minimum of 50 lakhs. That's all.
There's a question on why people in YouTube keep telling to invest in ITC shares. Are they paid to promote that share?
No, I don't think so. They may own too much of that share. That's it. One, making lakhs of people buy a share which you already own gives you a appreciation in your share also. No, that is the reason why people come on YouTube and give share recommendations. I don't think anyone on YouTube can promote ITC share and make it go up. They're not so powerful, so it's highly overrated. Their power, but by constantly talking about it, they may end up making people buy ITC when it is time to sell it. That is my only worry. But I don't think they're paid to do it, as far as I know.
So the next question is more to do with Sphere and more to do with understanding the product.
As I told you, we are trying to create one portfolio for family wealth, retirement corpus, or whatever is your very serious need. In one place, you'll be able to measure your returns and performance, and you'll be able to manage your investment very easily. Many people, after they retire, they get money. They'll have one account in Sharekhan, one account in Zerodha. Then they'll have one account with their old stockbroker. In 3 places, they'll be doing business. You ask them what is the total return they made in all 3 places put together. They'll say one place I made F&O, that you leave it, that is a loss. But here I made profit, I bought ITC. So they will take only the winning part and they'll talk about it. This is usual. Somebody would have bought 10 shares, but only one will be successful. I have seen even the people who make these recommendations. For example, I mentioned ITC. There are people who are very vociferously made recommendation. The only winning stock is ITC. The rest are all doing modestly. So what happens in this kind of scattered random investing is that you are not measuring properly. When you don't measure properly, you will not perform well. Your long-term performance will go down. You need to have all your investments in one place with enough diversification within that. You must have ETF, you must have stocks, you must have mutual funds a little bit, you must have some commodities, then you must have some global investments. And your stock portfolio should be representative of the growing economy. So all this has to be done now, and you must get one number to measure your performance. So that is what Sphere does. That is why it is superior to anything else that you can compare with or what you would do on your own. That is why it is superior.
So there is a question on real estate in the current scenario, your view, and what about REITs?
No, wait, let me complete this question. He says, what are the USPs? The USP is that of Sphere is that it goes towards assets which are undervalued, which are ignored. It builds asset allocation very, very gradually and consistently. It uses asset allocation to create superior returns by buying even less risky assets like gold when they are attractively valued. And it helps you measure your performance very clearly. It helps you scale up very clearly. You can add an SIP of 1 lakh or 2 lakh every month and you can keep on scaling. It reduces the churn in your portfolio. Many of the stocks we are holding in the Sphere are long term. We have hardly sold any stocks in Sphere in over a year and 3 months. So consistency of ownership. So you become better investors when you are invested in Sphere. And if some people need withdrawals, that is also possible. So no financial product is so investor centric, doing everything in one place, giving him clean, transparent measurement, measuring post fee returns always, keeping the taxation low, helping him scale up consistently. Everything. It's a package. So in the sense, it's a hugely versatile product. There are not enough peers which you can actually benchmark with Sphere. That's our problem. Next one.
So the next question is real estate in the current scenario, your view. Also about
there is
REIT.
one more. Wait. You are in which question? I am at Sasti Gautam. Yeah, I'll tell you. Yeah, you need to have an initial minimum capital of 50 lakhs. And every year you should contribute at least between 10 and 20% of incremental capital. At least. If you do that, you will be okay. Every month you can put in maybe 50,000 or 1 lakh. Then you will contribute 20% nearly, or even more if you put 1 lakh. So that is something that will be very, very healthy. So there is no limit. According to your saving potential, you could do it. But regular, consistent investing is the key. I want you to invest always. And when the market comes down a lot, try to do another small incremental investment in that month. Instead of one, you do 2 investments. That is the thing. Like mutual funds have 10% maximum weightage in a stock. Should individual investors also have a limit on how much? Yeah, it's better to have some weightage discipline. At market value, not at cost. See that how much should be maximum weightage up to you. Okay. I would think that up to 20% you can go. But beyond that, be very careful. People have gone about 20%. Yes Bank had lost all the money. I don't want that to happen. What is a good dividend yield? 5% is a good yield. Above that is a dream. Penny stocks. No, we will not invest in penny stocks. What is your view on penny stocks? Will Sphere invest for short-term gains? We'll certainly not invest in penny stocks. We'll generally stay away. Would you recommend a family investing in Solitaire to keep contributing there or deflect incoming further to Sphere? What we generally tell people is try to complement. Then you are able to balance nicely. So wherever the opportunity is better, you can give the money. In Sphere, when you give the money, I may have some opportunity in mutual fund also, in ETF also. Whereas Solitaire is a pure equity portfolio. So you should do your allocation between these two products. So between that itself, you will get a good compact. That is what I think is a good way to do it. M2W is a sphere. Sphere is meant for people who have higher capital. M2W is for people who have lesser capital. It's meant to take people towards sphere if they wish to. Real estate in current view. I think that real estate industry will go through a tough time because I think the industry moved too fast and now they are creating too much capacity. And secondly, I think REIT is a investment which give you modest returns. So it's not a high return investment. I don't know how many people will be comfortable with the returns which a REIT can give. Yes, here we have 1 year returns up to now. It's not yet completed 3 years. So Harshil, you want to give the data?
So the 1 year data is 16%, and since inception, that is 1 year and 3 months, is about 12%.
Yeah, benchmark is now the Nifty multi-asset 1. That's what we are. Nifty NSE has a multi-asset index. The number series 1. There are two multi-assets. We are using number 1 as the benchmark. That's how we benchmark Sphere. How to contact team for M2W? You can just go to our Twitter handle miles to wealth at miles to wealth, and you can message us. Or in the Twitter handle, we have a link tree which has got all the mail IDs and all the other presence of miles to wealth. And there you can click and you can reach out to us. We'll immediately come back to you. Hold on. Sir, I am a retired person invested in Sphere. I can't invest in SIP. Will Sphere help in my corpus? I can wait for 3 years in my investment. I think if you wait for 5 years, this corpus will become significant without touching it. So that is what I would say if you're not doing an SIP. But ideally, people who are younger should do the SIP. That will grow very well. But if you're not able to do, at least hold the portfolio passively before it starts performing. Don't be in a hurry. I'm not having too much current funds now at the moment. So there is nothing so interesting that I'm doing personally, except I have started a Trueblue account with ithought. That's the only thing I've done. Other than that, nothing big. Will Sphere invest in silver? Certainly. Even if it's attractively valued, we have invested in silver. Solitaire versus Sphere, which is less risk and maximum return. You cannot maximize return first. You have to optimize return, whether you're in Sphere or Solitaire. Sphere has a certain capacity to bump the return up because of the kind of decisions we make there. Solitaire will be a relatively more stable product. Sphere will see some volatility, but it will come out much stronger. So in that sense, Solitaire is much simpler product. Sphere has got, it's like a Toyota hybrid. It's got a lot of features. It's like a modern electronic car. But a Solitaire is a simple product. It's like a a regular car. It's something simple, very reliable. Reducing population growth in our country will affect real estate. Certainly, it will affect population. Not only population growth, also the changing trend of not wanting to have ownership of high valued assets and not willing to take loans, which young people have. So definitely that will have an impact in the long run. What is your view on future returns of gold from here on? It's not advised to do forward-looking statements. As per regulation, it's not correct. But whenever the dollar sees volatility, the gold will start doing well. And sovereign funds, that is, central banks of various countries are buying. Huge amount of quantity has been bought in the last 6 months. This is a very, very positive signal for gold. That's why gold is rising now. You can see the gold price going up. The reason is sovereign funds are buying. The reserve banks, sovereign funds, they're all buying. Anything else? What is your view about value investing and growth investing? I think buying at any price cannot make money. I'm very sure about that. So you must be very careful about what value you pay. Only then you make money, even in the best of stocks. So blindly buying at any price won't work. Growth at reasonable price is a sure shot winner. We do that a lot in all our products, GARP. Harshil, there is a question about what is the fee structure for Sphere? Can you tell that?
So the fee structure for Sphere is 1.5% per annum, and that is charged quarterly.
You tell how much, what are the other costs?
So there is no exit loan. The only cost that is there up and above the 1.5% fees will be your normal GST cost and all that, and that would probably come up to about 1.6, 1.7. So that is the overall cost, but we charge only 1.5% per annum. That is charged on a quarterly basis on the NAV.
So whatever fees you're putting out in the public domain, which I also tweet, is it after fees or before fees?
So the
Whatever
returns are all after
giving,
fees.
huh?
So the returns that we post on social media is all after fees.
So this whole first that, oh, they're making fees, so the returns have to be low is not true.
Mhm.
View on and foreign investment of NRE is Sphere focus on foreign investment too. For some investors, yes, I don't go and invest for an American investor in foreign, but for other investors, we are looking at where the taxation is zero. We are looking at investing for them. Any other questions, Harshil?
So there is a question on, does Sphere follow any particular style for equity portion?
Style. Meaning?
I think it has more to do with whether it is more growth investing or value investing, for which you've already addressed. But the specific question is, does Sphere follow any particular style for the equity portion in which Sphere is investing in?
Yeah, it's a reasonably aggressive investment style driven by growth. In solitaire, in both solitaire and in Sphere, we are following a approach which has a value orientation, but is mostly investing in growth businesses. I hope that answers the question. It's not buying at any price, but buying at a reasonable price.
So there is a question on view on foreign investment of NRE. But the second part of the question is, does Sphere focus on foreign investment too?
Yeah, we do for a certain set of investors. For American investors, we don't invest, but for others, we do.
There is a question on minimum investment horizon for Sphere.
I think it should be 3 to 5 years at least. So there is a question that 1.5% fee after minimum 6% inflation. No, it is not. It's a flat fee. There is no Sphere has a flat fee structure. Solitaire and Sphere both are flat fee structures. It has nothing to do with inflation. So it's just a flat fee. Solitaire, Sphere versus True Blue, which is better for aged person? I think True Blue would be better for the aged person. Unless you're having a lot of money and you are willing to take slightly diversified risks. Lower risk means it is True Blue. But if you're able to take diversified risks, which are calculated bets that will deliver superior outlier returns, then that risk taking should lead you to Sphere. Because here you will have commodity, you will have equity, you will have ETF, you will have everything. At the moment, I'm not tracking any thematic investments so aggressively. Valuations are nowhere near very attractive levels. 1.4% is from the portfolio only. It will come from the portfolio. It's based on the portfolio value. That's how the fee will be calculated. Any other questions? How redemption is taxed? Your equity taxation will be applicable to the shares. Mutual fund taxation will have equity taxation. Gold funds will have debt taxation. Global funds will have debt taxation. That's how it works. So you'll pay the tax on the individual investment. It's not at the portfolio level, but it will still tally. He's asking about which are the other sectors. So multiple sectors will do well in the next 5 years. It's not one, many will do well. So I think we should be patient. And when they start doing well, we should identify them quickly. Any other questions?
So there is a question that has come up multiple times. What is your current investment bent, and where are you investing your own funds? I think you've already addressed that question.
She wants an appointment to meet for consulting. Yeah, Harshil will meet you and explain the product to you. It is very much possible. So you can just get in touch with our team and we'll do the meeting for you. Even online, it can be done. Meeting is not a problem. Vriddhi will not have a fixed fee structure. It will have only the hybrid structure.
So there's a question on what's your take on insurance sector for the long term because of recent changes with respect to insurance and budget.
Yeah, it will take time. No, when they bring about such changes, it will take time. It will extend your investment gestation. As simple as that. You will get your annual warnings on how much tax you need to pay. Definitely, you will get a statement which tells you how much you need to pay. And the audited statement will also be given for every account holder. Any other questions?
So there's a question of will you be sending yearly balance sheet stating how much tax we have to deposit on dividends and profits? Yes, you will get all the statements from our side and all the help that you need.
See, this question of learning and all that, by being a customer is no more possible because the regulatory requirement on us is that we should not discuss what investments we make in public domain. That is why actually after we started PMS 4 years ago, I have not made even a single television appearance. You may ask how somebody else are doing that. They live in Bombay and they do what they wish, but we can't do that. So it's not possible for us to discuss individual investments in the public domain. I don't think we'll do that. It's not. It's too risky and it's not a safe thing to do. So we cannot be actually discussing the ideas in public. What is this? When would you? It's a login facility. I don't know why you want to see regularly. I don't see my portfolio every day. You're anyway getting a monthly statement. So I don't see any benefit in that. It only makes people check their portfolio every day, which is not a healthy habit. No, I don't. You can. Actually, you can answer this question. PMS investor has a login.
No, you will not have any login. So we will keep sending you your monthly portfolio, and we will have reviews with you also if you want to have. But we usually send you documents, monthly portfolio, and other details also to you at the end of the month. Second, we also have our newsletters that we keep sharing. So you will get all the information on how we are thinking, our entire thought process, what we find interesting, what we don't find interesting. All of that you will get along with your monthly portfolio details.
See, I'll tell you this, what are facilities which are offered to investors? They should help the investor. For example, if I audit and give you a statement, you can straight away go ahead and go on file with your auditors. So that is helpful. Similarly, we have a SIP in the PMS, which no PMS is having generally. We encourage our investors to make SIP. In fact, I want all my investors to do an SIP so that whenever the market falls, I'll buy something. And there'll be a habit and discipline of investing regularly. So that is one more thing that we are doing. Then when there's a lump sum, we come on alert. When you are doing new investments, we request you to transfer money so that we can participate in those new investments. There's a lot of customer centricity which we have in all our products, which is not there in the industry. So we have all these extra things which we do by looking at the individual client portfolio level, which the industry doesn't do. And we don't do what the industry does, which is make the customer very, very aware of his portfolio and value on a daily level, daily logging in and checking and all that, which I think doesn't help the investor. The industry is doing it. I don't know the reason. I have not asked anyone, but I feel that it's not useful to the investor. So I don't think that's a priority. No, it's very easy to look at a sector and think that it's a good valuation, but these are very, very interesting times. A lot of policy changes are coming. So sectors where policy changes are heavy can go through a very long period of wait. And that I think will apply to the AMC sector also. XARR. It's XARR, right? Returns, Harshil.
Yes, sir.
Is return presented XARR or CAGR? It's XARR.
So we have time for another couple of questions. So please do type in your questions, and we'll look at a way to address it as soon as possible.
See, actually, all our products are run by teams. So I think many of you may not be aware, at every product level, the teams run the products. So my job is more as an ombudsman. I'm also a client and I'm on the investment committees. For a period of time, I'll stop being the fund manager, and it's quite imminent. It will happen sooner than you think. See, M2W is basically my answer to what has happened to a lot of investors in platforms. I don't want to name any platform, but I'll just tell you this, what has happened in the platforms, so that you understand what is happening. So everybody goes to platform. Why are you going to platform? People tell you that, oh, here there's no fees, so you can get a free service. And they buy some funds in the platform. Now, not all funds are shown to the investor by the platform. The platform shows only certain funds. So investor picks from within those funds. So his choices have not been great. If you see the number of people who have got access blue chip to platform is huge, lakhs. All of them have lost money. Now they saved 1% and lost some 10% or whatever. I don't know how much they lost. They lost quite a bit. So this concept of platform being efficient and cost effective has fallen flat on its nose because the hidden costs are very, very high. Mistakes are very costly. So what I thought is that why don't you create a service where the client does all his fund investing in one place. It will be a blended product. There'll be debt, there'll be equity, there'll be gold, there'll be everything. So the cost will also be very modest. It will not be very high. But whenever the market goes down, we can alert him to make a lump sum. We can ensure that he makes a SIP in line with his earnings. Whenever earnings goes up, we can make him make his SIP bigger. Every year, we can make him grow towards a certain goal. This much money should be invested every year. And then measure how much it grew to. What is the XARR? Teaching the investor to measure his returns regularly. Making him understand that when the returns are low, he must invest more money. All these things are what made us deliver good returns for very rich people, very successful investors. But I want to do this for the small investor. And that is why we did M2W. That is the idea behind M2W. At the moment, I have bandwidth to do this for 10,000 people. We can do it for 10,000 people. But after that, we need to expand. So we need to invest all the money we get to create the infrastructure to service more people. And I'm pretty sure that we'll give a far superior investment experience than any platform you are talking about. It will be far superior. That I'm very sure, because we want the investor to succeed. We're not just looking at AUM, how much money to collect or how much fees. That's not the idea. And secondly, no mutual fund can influence us to make you buy a product. That's the most important point, where we are way different from the platforms. Platforms are completely compromised, according to me. I'm not naming any, but it's fair to assume that most are. What product will be preferred suggested when an M2W customer reaches 50 lakh milestone? It's entirely up to the investor, but we will give them an overview of all the products. They can choose the product which suits them the best. I don't have any bias. Now, I had this interesting conversation in my house, because my children are all at 48 lakhs and they are all only in that thing. And Harshil was also there. So I was asked this question. Even the RM came and said, sir, can you move from here to PMS? So Harshil showed me the statement. Showed some 14.5% XARR. The current portfolio, earlier returns may be even higher actually by 2-3%. So I said, why should we change? Let it just be there. So we are continuing pretty much there. I'm not changing. But later, if there is a need, you can do it. But at the moment, I didn't see any need to change. That's the point. So I'm just continuing. Likewise, you can take a call whether you want to continue or change. It could be changed for you. I mean, I'm not saying that you should do what I did. I felt this is convenient, so let it continue. It's done well for so many years. The strategy has worked, so let it continue. You may go to Sphere from there. So the difference between M2W and Sphere is, in M2W, you are when we ask you, you send the money, then you have to click approve, all those things. Whereas the same 50 lakhs, if it is in Sphere, we'll do everything for you and just give you the reports and briefing. So the closest to M2W would be Sphere actually, in the current form. But we could come out with more products also, which are versatile. It's too early to say. But at the moment, if you ask me what is close to M2W in style and strategy, it's Sphere. And it's got superior layers also. Mantra for success: invest regularly, save a significant part of your investment, invest every month, keep some money ready always to invest when the markets fall. Like, some political news, market can come down, you can buy. Don't take your money out to spend or to buy something you want. So your investment should be separate. Once you put the money investment, you should not touch it at all. For years together, you must grow your money. Be very disciplined. Don't sell your shares or your portfolio or mutual fund to buy an iPhone and car and bike and all those things. Those things should be dealt with separately. Keep a separate corpus for those things. Have a milestone. Know where you are going towards. It's very important, because otherwise people speculate, do F&O, lose everything. So if you are young, decide how much capital you have and then decide the next milestone. Like for my children, the next one is 1 crore. They need to go to 1 crore. That's the milestone. For me, it will be a higher sum. Likewise, for you, there'll be a number. stick to that milestone. Focus on it. Think what you should do to go there, reach there faster than you expect now. These are some of the good things that you can do in your investing. Call them mantras, but they work. Any other question?
Sir, in the interest of time, we can stop here. But we are very happy to interact with each one of you. You can get in touch with us at pms@ithought.co.in or get in touch with us directly on phones. I've also put the number there. And if there are any further questions, you can also mail them to us and we'll be very happy to address them.
The main point I want to say is that, see, these are products that are created keeping very long standing needs, gaps that we see in the market, and we have filled those gaps with these products. Those who have come early onto these products have had an exceptional experience. We want more people to experience and have a more holistic approach towards their investing. Measure, add, scale up, achieve returns, bring compounding into your life, and make it grow. That's broadly what we want you to do. And if you do that with us, it will be a privilege and an honor. Thank you very much.
Thank you so much for joining in on a Saturday evening. Have a great weekend ahead.